What if I told you that one government policy could make or break your entire crypto portfolio overnight? Regulations are coming fast, and if you're not prepared, you could lose thousands or even millions. But here's the good news. You can actually use these regulations to your advantage and position yourself for massive gains. How? That's exactly what I'm going to break down for you today. Governments around the world are cracking down on crypto. We've got China banning mining, the US tightening tax laws, the EU wants stricter compliance. It's a global crackdown. But what does all this actually mean for you as a crypto investor? In this video, I'm breaking down everything you need to know. How these regulations are shaping crypto's future, the smartest strategies to not just protect your investments, but actually grow them during this shift, and most importantly, how you can actually profit from the new rules. Before we dive in, do me a quick favor and hit that like button, subscribe to the channel if you haven't already, and turn on those notifications so you don't miss out on any future videos about the biggest crypto updates that could change your financial future. Okay, let's be real. Governments don't exactly love things they can't control, right? And for a long time, crypto has been this decentralized revolution. No banks, no middlemen, just pure decentralized finance. But now, the big players, the major economies, they're stepping in with some serious regulations. And honestly, there are a few reasons why. First off, taxation. Let's be honest, governments, they love their cut. They see all these crypto gains people are making and they're thinking, hey, we want a piece of that action, so they're bringing in stricter tax laws to make sure they get their share of your crypto profits. Then we've got fraud prevention. You've got to admit the crypto space has had its fair share of scams and rug pulls, billions of dollars gone. So governments are stepping in, trying to protect investors and bring some stability to the wild west of crypto. And speaking of stability, that's another big reason for the crackdown. Governments, they see these wild price swings in crypto, and they get nervous. They're worried that crypto could destabilize traditional financial markets if it keeps growing unchecked. And finally, we can't forget about control. Central banks around the world, they're all developing their own central bank digital currencies, or CBDCs. They want to be the ones calling the shots in the digital age, and they see crypto as a potential threat to their power. Alright, so we've talked about why governments are regulating crypto, but what are the biggest changes happening right now that are actually impacting your investments? First up, we've got the tax man. The IRS is cracking down on crypto, and they're coming for their cut of your profits. So if you're trading crypto, make sure you're reporting your gains and losses accurately. Trust me, you do not want to mess with the IRS. They're not known for their sense of humor. Next, we've got KYC and AML regulations. KYC stands for Know Your Customer, and AML stands for Anti-Money Laundering. Basically, these regulations are designed to prevent criminals from using crypto to launder money or fund illegal activities. This means that exchanges are going to be required to collect more information from you when you sign up, like your social security number and a copy of your driver's license. Now, I know some people are concerned about privacy, but honestly, I think these regulations are a good thing. They'll help to legitimize the crypto space and make it more attractive to institutional investors, which is ultimately bullish for the market. Another big one is stablecoin regulation. Stablecoins, which are cryptocurrencies pegged to the value of a stable asset like the US dollar, have exploded in popularity recently. But regulators are concerned about their potential impact on financial stability, so we're likely to see stricter rules around how they're issued and used. This could impact projects like Tether and USD Coin, which are two of the largest stablecoins by market cap. And finally, we can't forget about the SEC. The Securities and Exchange Commission, they're the top dog when it comes to regulating securities in the US. Look, I'm not going to sugarcoat it, regulations can be a pain, but here's the thing, they can also be a huge opportunity. Remember, every time the market freaks out about regulations, that's when the smart money sees opportunity. So, how do you become one of the smart ones? How do you not just survive but thrive in a regulated crypto market? Let's talk strategy. First and foremost, stay compliant. This is non-negotiable, people. Don't try to outsmart the IRS. Report your taxes, use crypto tax software if you need to. There are plenty of them out there, and stay on the right side of the law. It's not worth the risk. Believe me, the last thing you want is a knock on the door from a very unhappy IRS agent. Second, use regulated exchanges. Stick to the big names, the reputable ones that are already playing by the rules. Coinbase, Kraken, Binance US, these are all solid choices. Yes, you might find some smaller, unregulated exchanges that offer more privacy or lower fees, but trust me, the peace of mind of knowing your funds are safe and you're not doing anything illegal is worth it. Now let's talk about your actual investments. My third strategy for navigating regulations is to focus on regulated cryptos and companies. Look, I know, the whole point of crypto was to be decentralized, right? But here's the thing, the reality is that regulated cryptos are probably going to be the ones that dominate the market in the long run. Institutional investors, they're not going to touch anything that's even remotely risky from a regulatory standpoint. So if you want to position your portfolio for long-term growth, start looking at projects that are working with governments, not against them. Do your research. Find the projects that are playing by the rules and positioning themselves for mainstream adoption. Alright, so we've talked about how to stay safe and compliant in a regulated crypto market, but let's be real, you're not just here to survive, you want to make some serious money, right? Well, here's the good news. Regulations can actually create some incredible opportunities for profit if you know where to look. So, let's dive into some specific strategies for profiting from this regulatory shift. My first tip, and this is a big one, buy the dip on good projects. Remember what I said earlier about the market freaking out over regulations? That fear creates incredible buying opportunities. When everyone else is panicking and selling off their crypto, that's your chance to swoop in and buy low. But here's the key, don't just buy any dip. Focus on those high-quality projects that are actually solving real problems, and have a solid team behind them. Those are the ones that are going to bounce back stronger after the dust settles. Next, consider investing in crypto stocks. Look, I get it, buying crypto directly can seem intimidating, especially with all the regulations and security concerns. But here's the thing. You can still get exposure to the crypto market without actually owning any crypto directly. How? By investing in publicly traded companies that are involved in the crypto space. Think about companies like MicroStrategy, Coinbase, or Riot Blockchain. These companies are all heavily invested in Bitcoin or other cryptocurrencies, so as the crypto market grows, their stock prices are likely to follow suit. And the best part? You can buy these stocks through your regular brokerage account, so you don't have to worry about setting up a crypto wallet or dealing with any of the complexities of the crypto market. Follow whale movements. Whales, in the crypto world, are those individuals or institutions that hold massive amounts of cryptocurrency, and when they make a move, the entire market feels it. So, we've covered a lot of ground today, from why governments are regulating crypto to specific strategies for profiting from this new landscape. But what does the future hold? Where is all of this headed? Look, I'm not a fortune teller, but I can tell you this. Crypto is here to stay. Governments, they're not going to kill it. They might try to control it, but they can't stop it. The genie's out of the bottle and there's no going back. In fact, I believe that regulation, while it might seem scary right now, will ultimately be a good thing for crypto. It will bring much-needed legitimacy to the space, attract more institutional investors, and pave the way for mainstream adoption. So, what can we expect to see in the next 5 to 10 years? Well, for starters, I think we'll see a wave of institutional adoption like we've never seen before. Banks, hedge funds, pension funds, they're all going to be pouring money into crypto. They won't be able to resist the potential returns any longer. We'll also likely see the rise of stablecoins and CBDCs. Governments, they're not just going to sit back and watch as private companies issue their own digital currencies. They're going to want a piece of the action. So expect to see more central banks issuing their own digital currencies, and expect to see stricter regulations around stablecoins. Privacy coins, on the other hand, they might face an uphill battle. With governments cracking down on money laundering and illicit activities, privacy coins, which allow for anonymous transactions, might struggle to gain mainstream acceptance. And finally, get ready for even tighter KYC and AML regulations. As more institutional money flows into crypto, governments will be laser-focused on preventing money laundering and other financial crimes. Regulations are coming, guys, whether we like it or not, it's happening. But here's the thing. Instead of fearing regulations, smart investors use them to their advantage. When there are clear rules, everyone knows where they stand, and that creates stability and confidence. So stay informed, stay adaptable, and most importantly, stay ahead of the game. Remember, fortune favors the bold, but it also favors the informed.